A mortgage trap is about to hit Canadian homeowners, and 2025 will be the breaking point. If you bought during the boom, you could be in trouble. Here's what's coming and how you can protect yourself. So, in today's video, we are talking about families who have bought their home during 2020 to 2022 boom, many of them at ultra low interest rate. Now, as renewals approach, they are about to face a brutal new reality. And in this video, I'm breaking down exactly what this mortgage traps looks like and why 2025 and 2026 will be the breaking point and how you can avoid getting caught into it. So, what do I mean by a mortgage trap? It's a combination of three dangerous factors. The very first one in this one is the low rate mortgage taken between 2020 and 2022 are expiring right now. And renewal rates in 2025 will be at least 2 to 3 times higher than what most of the people paying. And the third factor in this one is that banks and lenders are tightening their rules, meaning not everyone will qualify to renew easily. So most of the Canadian homeowners are trapped because they cannot afford the new payment and they cannot also sell without losing money. And you might not even qualify to refinance. And this isn't just a theory, it's already happening right now. Let's look at how dramatically things have changed. In 2021, the average fixed rate mortgage was around 1.75. In 2025, many people will be renewing at 4 to 4.5% territory or higher if bond yield rises again. That might sound small, but it's not. So let's do some math over here. A 10% down payment on a mortgage of $600,000 at 1.75 will cost you $2,291. And at 4%, it's $2,298. It's roughly about $630 increase every month. And most family haven't adjusted their lifestyle to absorb this kind of jump, and that's the trap. And here's where it gets worse. Let's say your income hasn't increased significantly in 3 years. Well, the bank still has to requalify you under the new rate plus 2% stress buffer. So they are stressing you at roughly about 6% and higher as of right now. If you're refinancing with the same bank, that might not be the case, but depending on the situation to situation. And a family that was easily approved in 2021 might now be denied in 2025, even though they have made all their payments for the last 3 to 4 years. And that's how much tougher the system has become. And guess what happens if you can't qualify under those new rules? You are stuck with it. You might have to go with a private lender with a higher fees, higher rates, and things like that. Might have to take a short term rental with a higher interest or a renewal rate. Or the worst, you might be forced to sell your own home, often in a down market. Now, let's talk about a real world scenario which many people are facing right now. So, if you see over here, the purchase price back in 2021 and 2022 was roughly about $850,000. Considering a 20% down payment, that's $170,000 just in down payment. Then the mortgage amount came at $680,000. Now, if we consider a mortgage payment considering 1.6%, which was very easier at that point of time in 2020, 2022 as well, the mortgage payment comes at 2750. Now, when the renewal happens in 2025, guess what? The mortgage or the interest has jumped from 1.6 to 4% again, which is very typical. That's what we are seeing with most of the clients right now. It comes to a mortgage payment comes to at $3,577, and that's an increase of $827,000 a month, which if you didn't account for, it's much more of an increase. And if you consider per year, it's roughly close to $10,000. And the worst thing, that's not all. The main thing is the appreciation. Many people who bought it at the peak of the market, their home is not priced at same right now. Most of the market we are seeing it's roughly about 15 to 20, 10 to 20% decrease than what many people have purchased during the peak of the market. So it's like a catch. You cannot sell your property. If you want to sell your property, you have to take a huge loss on it. So that's what's happening in the market. And on the other hand, lenders are also getting nervous and it shows. They are increasing their risk based pricing as well. Sometimes they are also refusing to offer renewals at the same amortization. They might ask you for a full income verification at renewal, and they are also suggesting clients to switch to 30-year amortization to keep their mortgage manageable. And worse, some aren't renewing unless you are locked in at a higher rate terms. And this wide shifts are what makes the mortgage trap even more dangerous. So now let's talk about the real world implication for a different groups. If you're a homeowner, if you're an investor, and things like that. So for a homeowners, the very first thing is a higher debt load. It will also reduce your monthly cash flow in terms of how whatever amount that you qualify for, and that could potentially forced for a sale or a lifestyle downgrade as well. And worst of it is a family strain due to financial stress. Now, let's talk about what is happening if you are a landlord. The very first thing is the negative cash flow that is happening every single month right now. And we know what is happening in the rental market. Rental units are not moving as fast as it was moving back in 21 and 2022. And rent increasing is not favoring landlord as well. And tenants are refusing to leave as of right now. And most of the landlords are having difficulty offloading their property at profit. Worse, they are not making any profit, they are doing it at a loss. And some investors will hang on, many will list, and we could see a surge in inventory just as the demand is cooling again. Now, here are a couple of things that you can do to avoid this trap and take actionable steps. So, very first one is a start renewal process early. Talk to your mortgage agent bank 6 to 12 months ahead of your renewal. Many people wait until the last month and then your options are very limited in that. The second option you can do is to blend and extend. Ask if your lender offers a blended rate option to avoid sudden jumps. It spreads a rate increase over time. The other thing you can do is to adjust your amortization. Yes, it will cost you more on a longer run, on a longer term, but increasing amortization can also soften monthly short term as well. And again, there are other options as like renting out your basement, making it rentable, taking out HELOC and stuff like that. And the other thing that I'm consulting right now with many of my clients is to not panic sell right now. Like avoid dumping your property unless it's your only option. But the good news over here is that rate might start coming down in 2026 or the end of 2025 as well as we have seen in the first half of 2025. Banks, governments, and homeowners all faces hard decisions right now. And there is no silver bullet. But if you plan early, act wisely, and know your numbers, you can avoid the worst of the trap. And this is the biggest shift in Canadian home ownership in over a decade. So number of home ownership, what we are seeing right now, it's going down over a decade. But if you're someone who is committed to the process, if you know your number, if you know your limit, home ownership is still very much achievable. If you like this kind of content, the only thing I ask to like and subscribe to my YouTube channel. And if you're in Ontario and if your renewal is coming within 6 to 12 months, I would be happy to walk you through the process, what your options look like, and connect you with a great mortgage agent as well. My contact info is in the description. And if you want to see what's happening with an investor in 2025, check out my next video. Thank you so much for watching. I will see you in the next one.